going to dive deep into what's been happening in the real estate market this year. Let's welcome to the stage Rick Sharga, Executive Vice President at RealtyTrac.
So this morning, we had July existing home sales come out. And what I'm very happy to tell you is that July home sales were actually up over June and 1.5% above last year's July sales. And in 2020, the blue bars here, from June, July, August, September, October, November, December, numbers were just off the charts. We had a completely counter-cyclical year where that second half of the year was really strong. So what we're going to be competing with in September, October, November, and December are 2020 home sales that were an aberration. You're going to see those year-over-year numbers go down, and that's okay, because they should be going down. They should be getting back to normal. Compare them to 2019. You shouldn't get concerned. You're doing $40 billion in sales. Congratulations to all of you. We would be selling more, except we're doing this in the face of the lowest inventory we've seen on record. A good buddy of mine named Mike Simonson runs a company called Altos Research. Some of you may be familiar with that. He tracks sales and inventory numbers. And he was the first person this year to notice that inventory appeared to finally have bottomed out and was starting to come back up. So for the last couple of months, we've actually seen minor improvements in inventory. We're running still at about 2.6 months of available supply. In a normal market, a market with equilibrium, we'd be at 6 months supply. Here in California, in most markets, we're at a month and a half supply. That obviously creates bidding wars. Demand is outpacing supply. So we're not back yet. There have been published reports that we're off by about 6 million units. I think those are overblown. But my personal estimation is we're probably somewhere between 2.8 and 3.2 million units short on what's available. We're going to talk about new homes in a second, but don't forget the existing home market as one of the root causes for the weakness in inventory. Okay, 80 to 90% of sales in a given year are existing homes, not new homes. Supply and demand imbalance equal record home prices. You're certainly seeing that in your markets. When I get to the California numbers in a couple seconds, you'll see that California's median price in June was $800,000. And what that means in simple terms is that neither of my kids will ever be able to afford a house in California. And by the way, it's one of the reasons you're seeing less first-time homebuyer activity. According to the NAR numbers this morning, about 30% of sales are first-time home buyers. In a normal market, that's usually between 35 and 40%. So there's nothing for those folks to buy. But prices are up, depending on whose numbers you believe, anywhere from 16, 17, 20% on a year-over-year basis. Before you ask the question, no, we do not believe we're in a housing bubble yet. But if we keep seeing prices go up like they did, they're announced this morning, 17.8% year over year, a bubble is definitely in our future. But one of the things that has kept us in non-bubble territory is the fact that we have record levels of homeowner equity, $23 trillion in homeowner equity. So a lot of the people buying these really expensive houses have tapped into the equity they've generated in their also expensive houses, and they're making big down payments on these properties. And that's making them affordable. That combined with the historically low interest rates. So while we won't see foreclosures or even FHA foreclosures have a big effect nationally, there could be an impact on some local markets. But as I said, foreclosure activity is not going to be rising dramatically. This is not a repeat of 2008. Loan quality was excellent going into the pandemic. The recovery is outpacing expectations. The government industry intervention has been just remarkable. And this is where you come in as agents. This is what I was talking about when I was talking about RealtyTrac. 75% of homeowners have more than 20% equity. 91% of borrowers in forbearance have more than 10% equity. There is literally nobody who should lose a house to foreclosure if they have equity. Agents like you who know what you're doing can provide a huge service and prevent these people from having to go through a foreclosure by helping them tap into that equity, list their home for sale, walk away with money in their pocket, and get a fresh start. So with that, I want to congratulate you on your success. I want to thank Guy, Hillary, and Ed for inviting me back again. Hope to do this again next year with an even bigger crowd, and hope you'll all really enjoy the rest of this wonderful side ReUnite event. Thank you for your attention. Take care.